I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market was pummeled at times last week as an early rally attempt turned into very hard selling midweek, and then a small rebound late in the week. This weakness followed the huge drop last Friday after Powell's very pointed and hawkish speech at Jackson Hole. And talk from other Fed heads during the week brought big disappointment, as they made it clear there will be no rate cuts in 23. Mester actually came out and he said Fed funds are going over 4% and likely to stay there, and they want to stay tight to cure this inflation. And also, let's be clear, that to get a hold of this inflation, which the government and Fed created, they now sound like they're willing to sacrifice the stock market and the economy, and likely no soft landing. Interest rates moved up sharply, as also it's clear central banks around the world, well, they are tightening and will continue to tighten. And with economies sure to slow, that does bring demand destruction and what looks like a worldwide recession. Here in the U.S., 10-year interest rates got up to 3.30%, and it looks to us like it's going to threaten that last high and even more. The liquidity drain has put pressure on all the markets as metals and energies have moved down the last couple of weeks, and we showed over, I think it's the last 3 weeks, charts on the UK and China and the Eurozone stocks that there were big risks on the downside, and they were likely to lead the U.S. down, and they did that this week. And adding to market woes, President Biden came out and cut off chip sales to China, and that's for purposes of national security, supposedly, and stocks of NVIDIA and AMD, they both took big hits on Thursday, and that weighed on the indexes at that time. The unemployment report came out here on Friday, and that gave bulls some hope, and the market did move to the upside as the unemployment rate moved up to 3.7%. That was a surprise, and that's about the participation rate going up, so more people looking for jobs, and that does then skew the unemployment rate to the upside. So at midday, when we began recording this video, the S&P 500 had a peak of up about 47 points, pulling back a little bit now as I'm doing this recording, and the risks are high, still very high, that rallies will not hold up. So this rally may not. And we'll talk more about that when we look at the short-term view coming up later in the show. For the stock market, well, 9-week buying panic ended abruptly on that Powell speech, gained over 17%, but a big give back came, and we showed a target last week down to about 3,900, and it got within 3 points of that on the downside before this rebound that came Thursday afternoon into Friday. And what investors may finally be realizing is that the Fed has done a 180 from the stance that blew up the everything bubble to a very changed stance right now. So while the stock market got inflated to just huge valuations, so did earnings, and that supported that bubble that they created. Now things have changed. Talk about 180 turns. Zero interest rate policy now looks like interest rates are going over 4%. And a very weak dollar that was a support to the international companies because our goods were cheaper. Now we have a very strong dollar, So that really weighs on earnings for those internationals. Of course, government spending is still high, but that's coming down significantly, but still in the area of craziness of over $1 trillion a year. But the COVID programs were just beyond ridiculous and some of the worst governance I'd ever seen, causing this inflation that we have right now. And then, of course, worldwide recession is likely by what is going on. So the S&P 500 earnings growth that has been anticipated by analysts, well, right now they expect growth for the rest of the year of earnings of 6.7%. That would be from an S&P earnings of about $203. Well, that seems to me pretty nonsensical. They do use the 10-year average PE for their valuation computation. So the 10-year average PE, which was all inflated by the government and the Fed, that was 18.6%, 18.6 times, I'm sorry. And that puts fair value of the market at 4,000. As I'm doing this recording, it's at 4,000. But earnings are likely to fall, in my opinion. Bear market, the low PEs for bear markets are in like the 12 to 15 range. I actually traded one when I started trading where it was under 10. To me, the best case is that this bear market will make a low somewhere under 3,200 for the S&P 500. This earnings of $203 is likely to suffer from earnings compression, not earnings growth, based on everything what I just shared with you. So 6.7% growth in earnings this year? No way. That makes, based on the projection I just gave you, somewhere around major support. We'll use that as a target for 3170. Next time I do a big picture analysis, I'll show where that number comes from. That's actually a good target, in my opinion, for the first quarter of 23, which may actually bring us a bottom to this bear market. What does that mean? Well, just as we've said almost every video in here, keep selling rallies. Control your allocation and risk. Stocks, well, they rebounded Thursday and Friday, but still declining somewhere between 1.25% and 3%. Has the Russell's the worst of the indexes this week. Of course, they're filled with zombie stocks that borrow tons of money, and the higher interest rates go, the worse it is on them. Bond market, well, the 30s, they're down about 3.5 points. 10 years, up 17 basis points. That is a big jump in the 10 years, getting it up to 3.30. And the technical patterns in the bond market, well, they're really getting bad. There was a bounce that came perfectly on time for us, and we thought it had more life to it, actually. But now, things are bad. And the bond market is leading the stock market down. I started trading in 1974, and at that time, we looked at the bond market, and downticks in bonds or upticks in interest rates were bad. Well, that's where we are right now. As a matter of fact, the 60-40 allocation investors that have been somewhat safe for years, because when the stock market moved down, bonds moved up, well, that has changed. And I've been warning for a long time that there was a time coming when the bond market would lead the stock market to the downside. And that's where we are right now. And that 60-40 allocation, it is not working anymore. And it might be a very long time before that does. Gold, well, it moved down sharply, $25. The silver market down 70 cents or more. And they're stretching out a bottom that we were looking for. And they need to do some work in here. As interest rates going up, it's all bringing a flight to liquidity. So while investors need to sell, when they need to sell, they need to sell. And that means everything. And that's keeping pressure on the metals market, which looked like they were bottoming. But now I think they're going to need to do more work and stretch that out a bit before we get a good bottom. Still, the longer-term prospects, in my opinion, are great. Dollar, well, interest rates are really helping the dollar. And when you talk about that, you need to talk about the U.S. versus Japan, because the yen is lending a lot of support to the dollar, as the Bank of Japan is a source of strength for the dollar. Of course, the UK and the Euro zone, all all of them also raising, but not like they are here in the U.S. So those are all lending strength to the U.S. dollar. But as far as the Bank of Japan, who's making it clear they're more concerned about recession than they are about inflation, and their inflation rate is lower than the rest of the world, well, I would say to the Bank of Japan, you're fired. Oil, the interest rates are also affecting, and plus China, which is locking down again different cities for COVID with their zero COVID policy, well, that is weighing on the oil market. But it's also trying to bottom. And we think that it is going to be giving you a fairly good bottom fairly soon for the oil market as it does begin to gain some stability, getting a bounce here today, but still threatening the recent low. So it's got work to do also. Coming up in this show, we have such a great show, and what an analytical team we have. Ari's going to bring you a preview of short-term swing trading. This is a video that we do with a lot of stocks in there. Every other Tuesday, Ari does a phenomenal job, and he's going to show you multiple time frame analysis in Tesla. This is our cycle analysis and a bearish setup. And you're going to be so interested when you see this. Katie, she's going to bring you cycle analysis with options. This is amazing. You know, Ari and Katie, they are two of the world's experts when it comes to cycle analysis. Of course, we have 4 on our team right now with Matt and me. So she's going to show you negative bias in U.S. Steel, applying that analysis to an options trading idea as she brings you that on the Tastyworks platform. Then I'm going to show you we're in our final 3 days to sign up for our specials of huge 35 to 50% discounts and how you can take advantage of those. And I'll bring you the stock market analysis, short-term view on the S&P 500 and Nasdaq. And what I think is an attempted bounce, which may have started today and maybe not, and then big trouble coming for the stock market. You'll be able to see our momentum indicators in action, which I think you're going to find just great. That's what's coming up in this show. Be sure to go to the askSlim.com website. If you are brand new, don't miss an opportunity to become a free member or get some of our specials. And if you become a free member, well, you'll get lots of great information from us as we send out notifications that you can take advantage of. YouTube, please do subscribe to this channel. If you're watching this on YouTube, click the notification bell. You'll know when we post things. And do like this video. Give us a thumbs up. On Twitter, follow at askSlim. And any questions that we have, that you might have, about our memberships, huge offerings of education and analysis from what I believe is the premier site for support for traders and self-directed investors. Write to Matt at askSlim.com. This is a preview of a member video. Ari is going to illustrate short-term swing trade setups, and he's going to show you our cycle analysis and Tesla and why there is something negative going on right now in Tesla. Ari will really do a great job teaching you this style of analysis. Show it to him, Ari.
So this is the weekly cycle analysis for Tesla. Now this obviously had been in a very positive overall mode with positive cycles in place and no breakdowns. Clearly that has now changed as we have a lower cycle low versus that old low, and now a lower high that is likely forming versus that old high. So that overall positive structure has now turned bearish. If this were to be the high, it's reasonable to get a sell-off down to the 78.6 at 232.73 and that prior weekly cycle low here at 208.69. We are waiting for this to roll over, but it is giving just early signs of topping here in Tesla. Our next key weekly low is due 1031 to 1219. If we go ahead and shift over to the daily chart, so this is the daily cycle analysis for Tesla. Now for Tesla, we have a dominant daily cycle, which is then broken up into minor half cycles that you see right here. We had formed a very nice basing cycle right here with this higher cycle low versus that old low. And what you'll see is that we basically had a retest of that old high, did not make a new swing high, and rather have now gotten very close to this old daily cycle low here at 279.35. This is what is leading us to believe that an intermediate term high is forming here in Tesla. We do only have a neutral ribbon. We want to see that turn negative and also get that key daily cycle breakdown to raise the odds of an intermediate term top. But in all likelihood, that high has formed here. And what are we looking for? Well, let's focus now on this minor cycle right here. We have our next minor cycle low due around the middle part of September. And then on this dominant cycle, that next low is due around the middle part of October. So some of the evidence favors waves on the downside here as such. So a likely sell-off further down into the middle of this zone, which comes in around the 261 area, get a bounce off of that minor cycle rising phase, then get another hit on the downside after that into the middle part of October. So hopefully this helps you visualize the move that we are looking for here in Tesla. As always, price is the only thing that pays. We need to see the daily ribbon turn negative and get this daily cycle breakdown to keep this overall bearish projection in play. This is what we do for all of our trade ideas. We walk through our weekly and daily cycle analysis for you, show you our levels on the upside and downside, and very importantly, always walk through that level that invalidates our trade idea. You always have to have that level in mind, and if that level gets violated, it tells you that something has changed. For us, that is the 78.6 up here at the 307 area in Tesla. Our entry zone is coming in from around 294 to 301.5. So those are our levels here in terms of the upside. And on the downside, as I mentioned, we are looking for a move down to the middle of this zone around the 262 area. And we have a 61.8 at 249.35. So those are our levels in Tesla on the upside and downside, along with our timing here for this idea.
Great work on that. Thanks a ton. This is Cycle Analysis with Options. Katie is going to bring you basically a fantastic lesson on cycle analysis as she looks at X, that's US Steel. And then she's going to talk about setting up an options trade based on this analysis using the Tastyworks platform. I think you're going to find this just absolutely interesting and valuable to you.
Hi, this is Katie with askSlim. Each week, our Level 4 Plus members have the benefit of being able to request analysis on two symbols of their choice. Last week, a member requested analysis on US Steel symbol X. So first we're going to walk through that analysis, and then we're going to go over to the Tastyworks platform and demonstrate an option strategy that's appropriate for the analysis. So this is a 5-year weekly chart of US Steel, and I should mention that the analysis has changed since our member requested it last week. At that time, we had not had this week's bearish candle. Now, although on the weekly chart here, US Steel has not broken through this support zone or any significant levels, it has broken down on the daily chart, and I'll be showing you that momentarily. So on the bottom of this chart, we have cycle brackets that are 24 bars in length. Those cycle brackets are just a drawing tool that helps us visualize the money flow patterns. The actual cycles are outlined in black up around the candlesticks. And these purple vertical lines show where the actual cycle lows occurred, and you can then compare those to the ideal cycle brackets to get some idea of the consistency of the cycles. In the case of US Steel, those cycles are very consistent. These blue vertical dashed lines over here on the right show a period of time of a few weeks around the ideal cycle bottom when we expect US Steel to make its current cycle low and then to begin turning up into the rising phase of the next cycle. That period of time is expected between November 28th and January 6th. Another thing that you will notice on our weekly charts is this green and purple ribbon. This is our proprietary reversal scout, and we use it to show momentum. Notice how it turns green shortly after a cycle low has formed. That helps us to confirm the new rising phase. Also notice how it turns purple shortly after we have formed a cycle peak. Now, currently, the reversal scout is still green, but we're going to watch for that to flatten out and begin to turn over the next couple of weeks. Now let's switch over to the daily chart to get some additional information. Notice these negatively configured cycles that formed back here as U.S. Steel was forming the intermediate low back on the weekly chart. Negatively configured means that the cycle ends lower than where it began. When we have such a cycle, the probabilities favor not being able to take out the prior cycle high, and you can see that in each of these cycles, U.S. Steel was not able to make a higher high. Then, after we got our intermediate term low, we began to move up. Our reversal scout turned green first, and then our slim ribbon neutralized and then turned green. The slim ribbon is another proprietary momentum indicator that colors the candles red, green, or gray depending on momentum conditions. This cycle right here, although it did not end up making a higher high in line with the probabilities, did end up positively configured. It ended higher than where it began, forming a basing cycle. Now, a basing cycle is a positively configured cycle that occurs after one or more negatively configured cycles. And when that happened, that suggested that U.S. Steel would make a higher high in the subsequent cycle, and it did just barely. Then this week we got a breakdown. Look how U.S. Steel has broken through this important cycle low support and is now configuring negatively. Our slim ribbon has gone from positive to neutral, and our reversal scout is negative. So what we're looking for here is for U.S. Steel to move generally lower into the daily cycle timing window, which runs from September 22nd to September 30th. It may, in the meantime, attempt another upside move, but we would expect these minor resistances to hold. Those run from 23.11 on the downside to 24.32 on the upside, with a 78.6% fib at 25.18. On the downside, we have a short-term major 61.8% fib at 2018 and the 78.6% at 1852. So let's go over to Tastyworks and set up an option strategy. Here are the available expiration cycles in U.S. Steel. Remember that our daily cycle timing window ends on September 30th, so let's use that expiration cycle. It has an implied volatility of 68% with an IV rank of 51.5. So high implied volatility suggests a short premium strategy. We're going to set up a skewed strangle skewed to the downside. Now, as far as our strikes, let's remember the levels that I mentioned when we were looking at the chart. The top of the resistance zone was at 24.32, and the major 78.6% fib on the downside was at 18.52. So let's try to cover those levels. If we sell the 23 call and the 18 put, that gives us a credit of $1.26. With that credit, our break-evens are at 24.26 on the upside and 16.74 on the downside. Now, of course, you can move your strikes around to suit your preference if you want to be more conservative or more aggressive. This trade uses approximately $258 in capital to put on. So our max profit is the credit collected. Our max loss would be defined by 0 on the downside and infinite on the upside. Our probability of profit is 66%. We pick up short deltas of 19.23 and a daily theta of about $4. Let's take a look at the risk graph. Here's the risk graph. What you want to have happen is for U.S. Steel to stay in between our short strikes, or at least between our break-even points, and for time to just tick away so that we can buy these options back for less. Now, we follow various option trades each week at askSlim. To learn more about those trades, as well as all of our tools and services, please come and visit our website at askSlim.com.
Super job on that, Katie. This is a stock market. we're going to look at the S&P 500 and the Nasdaq, and a short-term view for 1 to 3 weeks. You can see our full analysis by becoming a premium member. That means that you will get to see everything we have on the weekly analysis also, and also on some of our very premium indicators that I'm going to show you a little bit coming up. But I'm going to show you how you can become a premium member at a huge deal. We just finished our premium services preview, a final 3 days right now of the specials that we're running, and I want you to take advantage of that. Even if you were not a PSP member or you're a free member here at askSlim, please do go to the top of our website and you'll be able to get information on that. So don't miss out on these special prices, 35 to 50% discounts. This is just an unbelievable opportunity for you to really advance your education in the style of analysis that we do. So go to askSlim.com, top of the page, and click the Learn More button, and you will then be able to get more information on this. Or, if you have more questions, write to Matt at askSlim.com. This is the stock market analysis, S&P 500 on the S&P 500 and the Nasdaq. We'll look at the short-term view of what I think is going to be a bounce and a trounce, and you get an idea of what I mean as we look at these charts. So this is the S&P 500 chart, and for those of you that are brand new and have never seen our charts, it probably looks like a bunch of spaghetti to you. But those of you that do understand our charts know that this has just amazing, valuable information. Just a quick primer on what I do. On the bottom over here are cycle brackets. This is a drawing tool. What this does is just give us the sense of the energetic movements in the market. That's the money flow. That's really what gives it its energy. And then we add in our momentum indicators and all of the information that comes out of the multiple time frames of cycle analysis to be able to understand the market and do projections. So what we have right over here, as you can see, is a rising cycle and a declining phase to that cycle. And you can see right here, that was the ideal. And this is how it resolved. So right up on here are the actual cycle lines, and these are the ideal. Same thing right in here that you could see as it bottomed right here where both of these energetic cycle, the energetic movement in the cycle was down, and here's where it rallied and got nowhere. We call this a left-hand translation, and then completed the cycle almost spot on time. You can see that. This cycle right over here, as you can see, these two were negative. This was extremely positive, and we talked about what we call a swamping going on. So let me take a closer look right over here, and you can see that this last cycle, this cycle right in here, couldn't even correct. While these things were coming down, these energetic motions, the upward momentum is illustrated here as you look at the slim ribbon, which is our really great momentum indicator, was moving up, and it wouldn't allow this decline. Also, you can see on the bottom, the slim ribbon PO. This is green, and that arrow says upward momentum resumption, and you can see it moved up as we expected. It got over the big 50% retracement, and up close to that 61.8%. I'll show you the Nasdaq, which was much weaker. But then after this rally, it came down and tested this low and then broke it. That is very negative. Now, if you saw our analysis the last couple of weeks on the intermediate term, we talked about the likelihood of it getting down near 3,900. Well, there's a low at 3,903 on Thursday. So it followed that perfectly. Here, these are the minor cycles right in here. As you can see, this one right here and this one right here. And here is the low area where we would expect to get that low, the minor bounce that comes right in here, and then potentially get up into these sell zones or resistance areas. And you can see in here today, it tried to rally, it was up 47 points, and now it's coming off up about 20. There is still a lot of energy to the downside in here. The slim ribbon PO is red. The slim ribbon is negatively configured in here, and that's going to prevent upside moves from being able to hold. If it can stretch out on some big upside day, it probably can get up to the 40-60 area. This is 41.13, and I don't think that's likely. It can get that high, though pattern-wise it really could. And what we expect is that, well, this is probably this minor low, but it could come down and take it out one day early in the week. and then begin to move up as we get into this bounce. But there is a ton of risk in here. Our original analysis had a best case of it coming down here and testing this low at 36.36. You can see that red line right over there. We had upgraded it and said, well, because this was so strong originally, maybe it gets down to the 61.8 holds. But now it got there really early, and that is not likely anymore. It's more likely you get a rally to this area up here, maybe 40.60, and then get into this period of risk. So we're going to look for very low odds that it rallies and only tests 3,900, and very high odds that it comes in here and fails and sells off and tests 36.36 or lower. This is a very risky period in here as you get out to the end of September. The harmonic family syncs with weekly troughs, in other words, on the weekly charts, in late September, which is this right here, and in late October, which is this next cycle out over here. So we don't know for sure whether this is going to be the big downside move or it comes out over here, but there is a ton of risk right in this period right here. This is our projection for this coming several weeks, and that is attempted rally up into this area, which may or may not have started, probably rally towards the end of next week or into even the following week, and then very hard selling potential coming out of there from mid-September to late September, where you could get some very serious declines during that period. I'm going to show you the NDX, which is basically the same analysis, except that it is weaker, and I'll show you why. And here is that analysis on the NDX, and that is, again, the same thing, but the same thing as far as you look at these negative cycle patterns in here, negative cycle, a positive cycle moving to a high, and then a failure. That failure right over there in those harmonics says that once it got under that low, which was 12,945, that it had turned negative, and you can see it fell right into this time frame right over there and tried to rally and now is failing today, and there is a lot of risk that this low will not hold in these next couple days, and then you get the move up in here and then a very big downside. Again, this lines up with late September. It says mid, but it's late September, and then the next one over here, late October. So that is just a huge risk. We'll look for maybe taking out this low, maybe not, trying to get up into this area, and then a big decline out over there, and very likely getting down here to this low at around 11,000 that it made way back over here on June 16th. So that is very likely that that's going to get taken out, and that's only 1,300 points on the downside on here. And by the way this market is trading, that could come pretty quickly. So a lot of risk, momentum here, as you can see, negative on the slim ribbon, PO on the bottom. What does positive momentum mean? Well, it means the market's going to go up, and negative momentum, let's go way back over here. Look at these signals over here. As I told you, the market was going down here in January and February, and when the market turned positive right over here, it was giving you these green and upward indicators, and now it looks like, it's red, and if it got up at all in here, it's going to give you a downward signal again. So we're looking for that failure in there in the Nasdaq, and that's a look at what the daily chart looks like under very negative conditions. I'm going to switch over for a second and show you another chart. These are 2-hour charts, and our members get to see our 2-hour charts, and you can see in here how important 2-hour charts is. If you are a short-term trader or intraday trader, when the momentum is green on the 2-hour charts, you bias your trading to the long side. When the momentum is red or negative, you bias your trading to the upside here. I don't know if I said upside or downside, and downside here. You can see how the slim ribbon in here gives you the negative resistances, as it's doing right here this morning, and failing from there here on Friday. So when it's in this condition, you want to bias your positions to the downside. That means bigger short side trades and more often short side trades, or maybe never long side trades, And when it's green, then you do it to the long side, because these tell you where you can get the biggest impulses. And to be a successful trader, you need to catch those big impulses. So these are 2-hour charts on the S&P 500, the Russell, the Nasdaq, and the Dow. Notice here that the earliest downward turn was on the Russell, so that gives you some indication of how you can get some sense around the market was peaking in there. And now, of course, we have quite negative conditions looking at these 2-hour charts. Again, here is the daily chart on the Nasdaq, which says rallies will continue to fail and there is huge risk. We talked about that in the very beginning of the show, that you really need to consider using rallies if you're an investor to lighten up your positions, because they could fail in a big way, just as they're doing right now here on Friday, after being up 40-something points, and now getting to where they're only up 10 points, and it could be worse here as we are now just past the midday period on Friday. That's everything I'm going to show you. I really hope that the show is incredibly illuminating to you. Remember that you can become a premium member for a huge discount, 35 to 50%, only for the next 3 days. So go to the top of the askSlim website and click on Learn More, and you will then be able to get that information on how to sign up and to really advance your ability in becoming a more profitable trader or self-directed investor. I want you to go to the website, especially if you are brand new and have never seen what we do, and become a free member, and you'll be able to get a good sense for that. On YouTube, subscribe to this channel and click that notification bell, and you'll know when we put things up. And like this video, give us a thumbs up, watch the member videos on the playlist, follow me on Twitter at askSlim, and any questions you might have on everything that we showed, write to Matt at askSlim.com. I want you to be so careful, because it is so crazy out there, and I'm always wishing you great trading.
Well, I'm going to say